Hey guys, welcome to Trading with Emotions. I'm going to be making a quick video on the setup that we're currently in. This is not financial advice, just trying to have some fun. I went live a little bit earlier and I talked about how there's a possibility that we will start playing out the cycle in inverse form, and this would be my bullish case for the week. You guys know that I provide a bullish, a bearish, and a neutral case when I give these scenarios out. So I'm going to go ahead and start with this bullish case today, just because if we do end up tracking this inverse cycle, then obviously there's going to be some major upside just because of the way the pattern is structured. And typically with these patterns, as they repeat every 2 months, you see the inverse happening, especially when there's heavy pressure to the upside or the downside. And this current pattern that we're currently tracking is obviously a pattern where shorts took the opportunity to bring the price down. So if we look here at the bullish case, all it is basically the inverse version of the 62-day cycle. So in this case, I would say from a bullish standpoint, we would come up to the $32 level. And if we end there for the week, great. That would be extremely bullish in the coming weeks. But remember, there's always that possibility that they short this on Friday. Statistically, it's happened more times than not. So that's just something that you guys have to be careful with. Bearish case for the week would be a major drop, and it's not going to be a pretty drop. The way I have this set up, we would come down tomorrow to the $23.50 level, and it would be like a fake out. So they would bring us back up to 26 on Wednesday, and then they would short us for the rest of the week, and we would end the week at around $24.50. This case would basically play out this giant wedge. Instead of a tiny wedge, it would be a giant wedge. And this would basically make any upside not happen for a little while, at least for the next week or two. So that's something that we do have to keep an eye out for. Even this playing out within this larger wedge. Remember, this is typically a bullish case because you create this divergence. And at some point, as you narrow down on this wedge, it will pop back up. So yes, I would say about 24 on Friday for the bearish case. And then we have our neutral chart for the week. So I did mention last week how I thought we were going to be closing in on this wedge. And the inverse head and shoulders pattern seems unlikely to happen just because the right shoulder is already so long. Just speaking on technical terms, it's very unlikely that an inverse head and shoulders were to play out this way. Why I believe that the neutral case is probably the most likely. We did end the day today red, and typically with days that are where you have downward pressure, you typically will have the following day doing something similar. And if we do create downward pressure, we would probably come back down to like 25, 25.50 around there, and then on Wednesday it would bring us back up to 26, and then we would trade sideways for a little bit until Friday and Thursday, where we would actually come up instead. And this would create a very nice wedge that would probably break out next week. So all of these cases, I mean, typically in the beginning of the year, you will have very sideways trading. Historically speaking, there's always very little volume coming in the beginning of the year, just the first week or so. So after that, around the middle of the month, we start picking up on volume. So I would say mid-January to February, that's when volume really starts to pick up. Alrighty guys, and that is the 3 scenarios for the week. I am going to be posting a video tomorrow, so stay tuned for that. And if you guys have any questions or comments, leave them down below. Alright? Peace out. Love you guys. Trading.